Family, what is going on? It's your boy Justin. Super excited to be here with you guys in today's video. Hope you guys are doing amazing. In this video, what I want to do is I want to go over a setup that we took on GBP NZD around October 3rd. We made, I don't know if you can see it, it's like, I'd like to say almost $9,000 on GBP NZD. But what I want to do is I want to take you guys through the thought process and how I was able to find this specific trade, and I'll show you guys where I sent it out and everything else in our free trading community, and we can go ahead and get this mug started. So in regards to it, the setup in particular that we're going to be going over is why we decided to buy down here. And what I'm going to do is I'm going to go ahead and throw on the handy dandy replay tool. Boom. Now, in regards to it, the first thing that I liked about GBP NZD was, first and foremost, was we had a relevant high that was right here, and we had broke up past that relative high, putting in a new high, right? So my first thought process was, okay, we've had this big extension. We're going to need some type of retracement before we can go up higher. So that was the first thing. Then I started scaling down to the lower time frame, trying to find out exactly where we are in the specific ranges. Now, what I did was I zoomed in and I started looking at price. All of this looks like very healthy price actions. You're having pullbacks, higher highs, higher lows, pullbacks, continuations, so on and so forth, right? It's a lot of healthy, just healthy mitigations, healthy price action. Now we came up into this range where we actually left an imbalance. So it was an imbalance from here to here. And then eventually we came back in, we tapped into that there, and then we continued on. Now, once again, we have healthy price action. We come to this specific candle. This candle was a pretty interesting candle to me. Now, why this specific candle was interesting to me is for a few reasons. I would say I like that candle because of the fact that it was the last candle down before a big shift up. What I want y'all to take away from me just talking to y'all is I want y'all to get more understanding and stuff. I don't want these videos to just be like, oh, okay, here's quick before and afters. I really want you to grasp the thought process that I'm having, right? What you guys want to look at is this specific candle here is the candle that forced price up and that actually went up above our previous high, right? So that was the specific sell to buy movement that pushed price up higher, and then we started continuing on. Let's keep going. So price goes up, makes this candle. Now you might say, hey, this is a big bearish, just random candle. Now, even though this was a big bearish candle on the lower time frames, we start scaling into that candle. Price is just healthily mitigating and moving and grooving, right? We come back, we retest that candle several times. It didn't look very significant to me. This, in my terminology, this is what I like to call just a trap, right? This is where a lot of basic traders will come in and they'll see this candle. They'll try to trade smart money concepts or whatever you want to call it now. There's so many names for this BS nowadays. This is a candle where they're just going to come through and get trapped. So for me, that was a trap candle. So as price starts to move and groove and it's starting to show us signs of retracements, my thought process was I really like this candle. There's something about this candle. That's the last candle down that made that big shift up. I didn't think price was going to come in and take out all these lows and so on and so forth. So what I did was I looked at this specific candle and I placed a limit order here, and we put stops right there below the lows. It was about 32 pips, and then we targeted the relative highs. Could have went for that -27, and that's all good and dandy, but for this one specifically, I just wanted to go for the highs. There's nothing wrong with always going for the -27. A lot of the times what I do is once price comes to 100% retracement, or this high, the previous high, I'll close out like 70% of a trade here, and then I'll let the remaining 30% ride, right? And that's like a good strategy on how you guys can start taking profit on swings. But for me, on this setup, I didn't take it to the -27. Pretty sure it did go to the -27, but I was in and out of this thing around the high. So price comes down, comes close to our entry, boom, finally taps us in at the open, comes to the 50%, activates, and we had an instant big push right after that. Now it came back to retest a couple times, Now, notice what's happening too as we come back to retest. We start accumulating, right? We had, I don't know what schematic this is off top of my head, but we had this push down. We went a little bit lower. We came up, even though we didn't break the high, we came back, we mitigated this. Finally, we pushed up. We had a BOS. And then, it gave good opportunities to keep buying, right? There's another opportunity to keep going in at the lower time frame. Price kept going. We had a little bit of news to help us out. It did go to the negative 27. We took it to the open, and just like that, boom, we had a solid trade. Here's something that most people will not talk about, and that is, how do you manage the trade? This trade lasted for a total of 4 days. We're sitting in this trade for 4 days. So how do you manage yourself sitting in something for 4 days? Now, here's a key thing. The way you manage a position is just as equally important as how you found the position. It's just as equally as important as how you manage the risk on the position, right? I would say step one, how you manage to stay in a position like this and not get shaken out, is first and foremost is you got to know what your risk appetite is, and then how much potential reward that is on the table, right? On this setup, this trade was a 1-to-6 risk reward, right? As you guys can see, let me zoom in real quick. This one is a 1-to-6, right? So being that it's a 1-to-6, you have to look at yourself and say, okay, cool. The reward is potentially there. The reward is never guaranteed, right? In trading, the best position to be in is no position. The best position to have open on your account is no positions. As a trader, you manage risk. You're not a trader, you're a risk manager, right? So you manage risk. The safest position for you to be in is no position. So if you're going to expose yourself to risk, the reward obviously has to make sense. But for the reward to make sense, you got to understand what you're potentially willing to risk. Some traders, they risk 1%, some risk 2%, some risk 3%. Some people go by dollar figures, whatever. So figure out what you're comfortable risking, figure out what you're comfortable losing if you do lose. So that's step one. Step two is understanding price action, right? You're not going to be able to control price action all the time. You're not going to be able to depict and just click and drag or blow on the screen and sit there, clap and sing songs to the chart, and then it's going to do what you want it to do, right? That's not how this shit works. But what you are able to do is you're able to analyze price action and sit and wait for the most optimal opportunities for you to maximize those wins. Now, what do I mean by that? It means adding to your position when you have a positive indication that price is heading to your direction. How do you add? You add to pullbacks, right? You add to lower time frame continuation setups, right? And then another big thing I would say in the sense of holding positions is you got to just understand yourself. If you're a swing trader, if you're a intraday trader, you got to find things that work for you. For me, I don't want to sit here and look at the charts every single day. I don't want to sit there watching NASDAQ every morning on the 1 minute and the 5 minute and all these different time frames. I don't want to look at US 30. I don't like that stuff. It doesn't work well with me and my personality. My personality style and how I live my life, I don't want to sit and watch a chart all day long, or I don't want to sit there for the New York session the entire time and look at charts. I like FX just because of the fact that at this point I mastered FX, right? But I can take setups where I'm catching the best risk reward opportunities. Anything above a 1-to-3 is amazing, right? People will sit here and say, oh, I caught a 1-to-50 and 1-to-90 and 1 to whatever, but it's just like there's only one kid that I know, one of my boys from the UK. He ended up moving to somewhere in Asia, Thailand, ladyboy. Got him! Whatever, he's over there, but there's only one guy I know, my boy, the master of coin. Shout out to you, bro. He's the only kid I know that can actually consistently catch high RR setups. So I'm talking about high RR. I'm talking about like 15, 20, 30, 40. It's the only kid I know that can consistently catch those, and that's that. But what I'm saying is anything above a 1-to-3, you as a beginner trader, intermediate, anything above 1-to-3 is phenomenal. I just went on a rant. I mean, I'm proud of that guy. I remember meeting him when he was a bum. But, now he's a winner. So shout out to you, bro. But yo, in regards to it, anything with a positive risk reward ratio above 3 is a phenomenal setup, right? So you got to just understand that if you have good risk management plus good risk reward ratios, high RR setups, plus being able to manage price action with manage your position by just, analyzing price action, you could take setups like this on a week-to-week basis, and you can catch 1 or 2 good quality trades, and those 1 to 2 good quality trades a week will pay you out for the month. Like, I kid you not, right? In the last video you guys saw us do Euro odd, that was a 14K profit. In this video, this was like a $9,000 profit, right? I mean, between both of those trades, it's 25,000. That covers my mortgage, the HOA, the whatever. In regards to that, what I want y'all to take away from this specific setup is just, you know, find candles that make sense. Don't fall for traps. Look for candles that make the most sense, that you know, that disturb the natural market structure. What I mean by that is, you know, if this is the relative high, right, you want to look for those specific candles that make that move down, that then goes and disrupts the market structure, causes that break of structure. So somewhere in there to come back to catch an entry from, and then rise, right? I know some of y'all love my drawings. I was an artist in a previous life.
Stop it. Get some help.
You know, we went from drawing on canvases to drawing on charts, right? But guys, if you enjoyed this video, click the first link in the bio. If you want to join the free signals, just click the first link in the bio. It's going to introduce you to the bot. The bot will guide you through the steps on how you can set up your account, get funded, and start trading with us in our free community. And then from there, all you have to do is just follow the steps, get started, fund your account. The live chat will add you to our private chat, and from there, I mean, you're good to go. You can start trading and start making money like all the other people in our group chat, right? Make sure you guys subscribe, right? Number one thing, subscribe, like, comment, and I'll see you guys in the next one.